All right, so get this. We're diving into Action Construction Equipment Limited, ACE, and their second quarter performance for fiscal year 25. We've got reports, press releases, and earnings presentation, really the whole nine yards. So yeah, get ready because we're about to take a deep dive into ACE. We'll see what their success means for the future of construction and agriculture in India and maybe even globally.
What's really fascinating is that ACE is reporting record-breaking numbers this quarter.
Really record break. We're talking record breaking revenue, profit, the whole shebang. But before we get into all of that, for those of you who might not be familiar, ACE is a major player in India. And they're not just building construction equipment, they're big in agriculture too.
Yeah, ACE has been around for almost 30 years and they've established this global presence. But I think what's really interesting is their dominance in the mobile crane market. They've got over 63% of the market share in India. That's more than half of all mobile cranes in the country.
Wow. Yeah, they're also leading the charge in tower cranes with over 60% of the domestic market share. But, okay, let's get back to those numbers for a second. Their revenue jumped up 12.2% year over year. That's not chump change.
Yeah.
And their profit, or PA, is up a whopping 28.3%.
But here's where it gets really interesting. Their EBITDA margin expanded by a significant 267 basis points.
Okay, hold on. For those of us who don't spend all day looking at spreadsheets, break that down for us. What does that even mean?
Basically, it means they're becoming way more profitable. They're making more money for every rupee they spend. Just this quarter alone, they pulled in 7.54 billion Indian rupees in operational revenue. That translates to about 92 million US dollars.
Oh, yeah, that's a serious chunk of change. So what's the secret sauce? What are they doing that's working so well?
Well, the company says it's all about operational leverage, a better product mix, and efficient cost control measures. You can think of it like a well-oiled machine. They're making smart decisions about what to produce and how to produce it efficiently.
It's like they've found the sweet spot. And if we take a look at their sales volume, their cranes, material handling, and construction equipment segment is on fire. They're seeing a 9% year-over-year growth, with almost 3 million units sold just in the first half of fiscal year 25.
But there is a bit of a twist. Their agriculture equipment segment hasn't been doing quite as well. Sales volume has actually dipped over the last year and a half, so that kind of makes you wonder what's going on in that part of the market.
Yeah, that's definitely something to keep an eye on. Now, let's zoom out a bit and look at the bigger picture here. Could ACE's success be tied to what's happening in India's economy as a whole?
Oh, absolutely. The Indian government is pouring money into infrastructure projects, roads, railways, housing, you name it. And we're not talking about a few thousand rupees here. It's serious money. Take the National Infrastructure Pipeline, for example. They've allocated a staggering 1.4 trillion US dollars to these projects.
Wow, that's an insane amount of money. It's no wonder ACE is doing well if they're supplying the equipment for all those projects. And it's not just construction, is it? I've heard a lot about this Make in India initiative.
You're right. It's not just construction. Make in India is all about encouraging companies to manufacture their products right here in India. And guess what? That initiative is creating a huge demand for the kind of equipment that ACE produces. It's like a perfect storm for them.
So ACE is in this awesome position where they're benefiting from both their internal strategies, like smart cost control and choosing the right product mix, but then also these external factors like government spending and these economic trends in India.
Exactly. And what's even more impressive is that ACE isn't just riding the wave, they're actively pushing the boundaries. They've been launching some really cool new products, like India's very first fully electric mobile crane.
Whoa, an electric crane.
Yeah.
That's pretty amazing, especially in a world that's increasingly concerned about sustainability. What else have they come up with?
Well, they've also rolled out India's largest mobile crane, a 180-ton crawler crane. Plus, they're expanding into new categories like aerial work platforms and telehandlers.
Sounds like they're really building a diverse product portfolio.
Huh.
And they're not limiting themselves to just the Indian market, are they? I've heard they're aiming to make a bigger splash internationally.
That's right. They've launched a line of tractors specifically for the global market called the Forma range, along with a telehandler and a backhoe loader nicknamed the Phantom 4x4. They're definitely aiming to increase their revenue from exports in the next few years.
So it sounds like they're setting themselves up for some serious long-term growth. But let's not forget about that dip in their agricultural equipment sales that we talked about earlier. You think that could have anything to do with this focus on international expansion?
That's a great question. It's definitely possible that they're shifting some of their focus and resources towards breaking into these new international markets. That could explain the temporary dip in their domestic agricultural sales.
That makes sense.
Yeah.
But it also makes you wonder if there might be some broader economic factors at play that are affecting the agricultural sector in India.
That's a good point. We should dig into those potential factors in more detail later on. But first, let's take a closer look at ACE's financials, particularly their balance sheet and some key ratios. That can give us a clearer picture of their overall financial health.
Okay, let's crack open that balance sheet and see what's going on. I'm curious to see what their assets and liabilities look like.
Well, there are some interesting trends in their balance sheet. Let's start with their assets. Their property, plant, and equipment have been steadily increasing year over year, hitting 5.67 billion rupees. This shows that they're continuing to invest in their production capabilities.
And their investments, both short-term and long-term, have also been growing. They've got a sizable portfolio that's already worth over 7.3 billion rupees.
And remember, these figures are only for the first half of fiscal year 25. It'll be fascinating to see how they change by the end of the fiscal year. Now on to their liabilities. One thing that jumps out is that their borrowings have increased significantly in the first half of this fiscal year. They shot up from a tiny 39 million rupees to a substantial 1.14 billion.
Wow, that's a huge jump. That definitely raises some questions. Could that be related to their expansion plans and investments in new products and markets?
It's very likely, but we should also consider their debt-to-equity ratio to get a better sense of their financial risk.
Good point. Their debt-to-equity ratio is actually still quite low, sitting at 0.08. This suggests that they're not relying too heavily on debt to finance their operations. That's generally seen as a positive sign, right?
Absolutely. It means they've got a healthy balance between debt and equity. It's also worth looking at their current ratio, which measures their ability to meet their short-term obligations.
Their current ratio is a solid 1.33. This means they've got enough liquid assets on hand to cover their short-term debts without any issues. So far, so good.
Very good. Another positive sign is that their working capital days have actually decreased slightly, going from 42.87 last year to 36.68 this year. This indicates they've become more efficient at managing their inventory and receivables.
So looking at all of this, it paints a pretty positive picture of ACE's financial health. They seem to be managing their assets and liabilities effectively while making strategic investments for future growth. But of course, we have to remember that financial performance can fluctuate, and this is just a snapshot in time.
You're absolutely right. It's always wise to look at a company's performance over a longer period of time and within the context of broader economic trends. And speaking of trends, let's dive into the specific sectoral growth drivers that are playing a role in ACE's success.
Now, this is where it gets really interesting for anyone who's keeping tabs on the Indian economy. We've already talked about the government's huge investments in infrastructure and that Make in India initiative. But there's a lot more going on, isn't there?
Oh, you bet there is. Let's start with the manufacturing sector. It's projected to reach a mind-blowing $1 trillion by 2025. The government's production-linked incentive schemes, or PLI schemes, are a big part of that growth. These schemes are designed to boost domestic manufacturing and attract foreign investment across 14 different sectors.
And those PLI schemes could generate an extra 3 trillion rupees, or roughly 37 billion US dollars worth of production over the next 5 years. That's a huge opportunity for companies like ACE that supply equipment to the manufacturing sector.
Absolutely. And let's not forget about the Vocal for Local and China Plus One strategies. These are all about encouraging companies to source their products and materials from within India instead of relying on imports. This shift is really revitalizing the industrial capital expenditure cycle. Companies are investing more in their facilities and equipment.
In fact, the manufacturing capital expenditure outlay jumped up about 17% to 1.11 trillion rupees in the fiscal year 25 union budget. That's a pretty significant increase. It seems like the government is really putting their money where their mouth is.
They definitely are. Now, shifting gears to urban infrastructure, the government is focusing on initiatives like the Pradhan Mantri Awas Yojana, or PMAY, which aims to provide affordable housing to a whopping 10 million families. They're also establishing an Urban Infrastructure Development Fund, or UIDF, to upgrade transportation networks and develop infrastructure in smaller cities.
All of these initiatives are going to involve massive construction projects. That's going to create a huge demand for ACE's construction and material handling equipment.
Exactly. And then there's the railway sector. The government is investing heavily in expanding the railway network. They're building new lines, developing high-speed rail corridors, and planning to introduce 400 new Vande Bharat trains over the next 3 years.
Wow, that's a lot of trains. And building all that railway infrastructure will require a wide range of construction equipment, from cranes and earth movers to specialized machinery. It's another big win for ACE.
Definitely. And speaking of transportation, the government is also focused on expanding the national highway network and developing multimodal logistics facilities.
All right, the Ministry of Road Transport and Highways is planning to add a whopping 14,000 kilometers of highways in fiscal year 24 and has received a massive allocation of 2.7 trillion rupees in the fiscal year 25 budget. That's a lot of road construction.
It is. And it's not just about building new roads. They're also focusing on improving logistics infrastructure. They've got plans to develop 100 PM Gati Shakti cargo terminals by 2025, which will further boost demand for material handling equipment. ACE is in a great position to capitalize on all of this growth.
It sounds like ACE is operating in a really sweet spot right now. They're riding the wave of growth in multiple sectors that all require the equipment they specialize in.
That's right. They're reaping the benefits of the government's focus on infrastructure development, manufacturing, and even agriculture, despite that recent dip in their domestic agricultural equipment sales.
Speaking of agriculture, we can't forget about that sector, even though ACE's domestic sales have taken a hit recently. The government allocated a hefty 1.52 trillion rupees to agriculture in the 2024-25 union budget.
And the Indian tractor market is projected to grow at a compound annual growth rate, or CAGR, of 6.7% between 2024 and 2029. That suggests the long-term prospects for the agricultural equipment sector are still pretty positive.
Okay, before we wrap up this first part of our deep dive, let's turn our attention to ACE's stock market performance and their capital structure. This is where things get interesting for investors.
Great idea. AC's stock has been doing quite well over the past year, outperforming the Sensex by a significant margin. As of September 30th, 2024, their share price was 1,387.4 rupees, which gives them a market capitalization of 165.22 billion rupees.
That's impressive. So who are the major players holding shares in ACE?
As of September 30th, 2024, the promoter group held a 65% stake in the company, which shows strong ownership and commitment. Foreign institutional investors hold a 10% stake, while domestic institutional investors hold 2%. The remaining 23% is held by the public.
It's interesting to see that a decent chunk of the shares are held by the public. That usually suggests that investors have confidence in the company.
Absolutely. And their average daily trading volume is a healthy 468,000 shares. This indicates good liquidity and interest in their stock.
You mentioned capital structure earlier. Can you break that down for our listeners?
Sure, ACE has a fairly simple capital structure, primarily consisting of equity and some borrowings. They've issued 119.1 million equity shares, each with a face value of 2 rupees.
They've also set up a capital redemption reserve of 3.1 billion rupees, which demonstrates their commitment to financial prudence and their long-term vision.
They've also been consistently paying dividends, which is always a good sign for investors.
So we've covered a lot of ground here. We've talked about ACE's background, their stellar second quarter results for fiscal year 25, the sectors that are driving their growth, their financial health, and their stock market performance. It's a lot to take in.
We've definitely laid a solid foundation for understanding ACE's current position and their potential for the future.
But our deep dive isn't over yet. In the next part, we're going to explore some of the potential risks and challenges that ACE might encounter, as well as their plans for growth and expansion. We'll also try to figure out what's going on with those agricultural equipment sales. Stay tuned.
Welcome back to our deep dive into ACE. So we just finished talking about all the positive things happening with the company, like their really impressive performance and all those exciting growth opportunities in India.
Right now, I think we have to kind of switch gears a bit and take a look at the other side of the coin. Like, what are some of the potential risks and challenges that ACE might face down the road? Because no company is completely immune to, bumps in the road. And it's really important to understand those potential headwinds as we try to assess their long-term prospects.
Oh, absolutely. I think a good place to start is by zooming out and looking at the global economic landscape for a second. We've got inflation, rising interest rates are going up in a lot of countries, and that could have a real impact on, global demand for construction and agricultural equipment.
Yeah, that's a really good point. Because ACE is aiming to increase their export revenue significantly. So they're not exactly isolated from, these global economic shifts.
Exactly. If those international markets they're targeting start to slow down, it could throw a wrench in their expansion plans.
Yeah, that's true. Another thing to consider, I think, is competition, both in India and globally.
Oh, absolutely. The construction and agricultural equipment markets are incredibly competitive. There are a lot of big players out there all vying for market share. So ACE will need to keep innovating and find ways to stand out from the crowd if they want to stay ahead of the game.
Okay, speaking of innovation, let's talk about the risks that come with launching new products for a second. ACE has introduced some really exciting new products lately, like that electric mobile crane we were talking about earlier. But new products always come with a certain level of uncertainty, don't they?
Yeah, there's no guarantee that these new products will be a hit with customers. Their success hinges on several factors, things like pricing performance, how well they're received by customers' competition from existing products.
Plus, there's always a risk of, unexpected issues during the product development and launch phases, which can lead to delays, budget overruns. Those can really eat into profits.
Absolutely. And then there's the whole issue of costs. Another risk that ACE needs to manage is the potential for rising input costs. I mean, we've seen a lot of volatility lately in the prices of things like raw materials, components, energy.
Yeah, for sure. If those input costs jump significantly, it could really squeeze ACE's margins, even if they're able to pass on, some of those increased costs to their customer.
Exactly. And of course, we can't forget about geopolitical risks. I mean, global events like, what's happening in Europe can have a ripple effect on economies and supply chains worldwide. These are events that are really hard to predict and even harder to control.
Right, and those kinds of unforeseen events could disrupt ACE's operations, especially, their international expansion plans.
Exactly. Now let's bring things back to India for a second. There are a couple of country-specific risks that I think we should highlight.
You're talking about that slowdown in ACE's agricultural equipment sales, right?
That's one of them. That decline in sales over the past year and a half, I think, raises some red flags about the health of the agricultural sector in India. It's definitely something we need to examine more closely.
Yeah, for sure. So what are some of the things that could be contributing to this slowdown?
Well, one possibility is that changing weather patterns and unpredictable monsoons have impacted agricultural output in parts of India. Farmers rely on predictable weather for their crops. And when the weather throws them a curveball, it can impact their yields and their income.
That makes sense. Unpredictable weather can make it really tough for farmers to, plan ahead and invest in new equipment.
Right. And fluctuations in crop prices can also impact farmers' profitability. When prices drop, farmers have less money to spend on new equipment.
Plus, there are also, I think, longer-term structural challenges in Indian agriculture that might be playing a role. Things like, small farm sizes, low levels of mechanization, limited access to credit and insurance. These are issues that have been around for a while, and they can really hinder the adoption of new agricultural equipment.
That's right. Now let's shift to another India-specific risk potential policy changes. The current government is very business-friendly and focused on infrastructure development, but there's always a chance that policies could shift in ways that might impact ACE's operations.
Yeah, changes in government regulations, tax policies, investment incentives, all of that could create a lot of uncertainty and potentially affect ACE's profitability. Businesses like predictability, and those policy shifts can really disrupt that.
Exactly. Now, it's important to emphasize that these are just potential risks and challenges. They might not happen, and ACE has a pretty good track record of successfully navigating, tough situations.
Right. It's not about predicting the future. It's more about understanding the potential headwinds that they might encounter and then assessing how prepared they are to deal with those headwinds.
Exactly. Now that we've explored those potential risks, I think it's time to shift gears and talk about ACE's plans for growth and expansion in the future. We've already touched on their international expansion strategy and their focus on launching new products, but what else are they doing?
One thing they're definitely doing is trying to solidify their leadership position in the markets they're already in. They're aiming to grab, an even bigger share of the mobile crane and tower crane markets in India.
Right. They're also expanding their footprint within India. They're targeting regions that have a lot of potential for growth in infrastructure and construction. It's like they're strategically positioning themselves where the action is going to be.
And they're not limiting themselves to just geographical expansion. They're also exploring opportunities in, new product segments, going beyond just construction and agricultural equipment.
That's right. They've already dipped their toes into the aerial work platform and telehandler markets. And they're likely to explore other related areas where they can leverage their expertise and manufacturing capabilities. It's all about diversifying and finding new avenues for growth.
So it sounds like they're going all in on, a multi-pronged growth strategy. They're expanding geographically, they're diversifying their product portfolio, and they're strengthening their position in those existing markets.
That's a great way to put it. They're also investing a lot in research and development. They know that to stay ahead of the curve, they need to keep innovating and developing cutting-edge products that meet the evolving needs of their customers.
And they're also, I think, focusing on improving their service and support network,
Hmm.
which is so crucial for keeping customers happy and building those long-term relationships. Satisfied customers are loyal customers.
Absolutely. Another key area of focus for ACE is sustainability. They're committed to reducing their environmental impact and developing eco-friendly products like that fully electric mobile crane that we talked about.
Yeah, that focus on sustainability is really smart on multiple levels. I mean, it aligns with those global trends, enhances their brand image, and helps them attract customers who really care about the environment.
Right, and it also positions them well to capitalize on the growing demand for sustainable solutions in the construction and agricultural sectors. It's a win-win.
So it seems like ACE has a clear roadmap for growth with a focus on, innovation, expansion, sustainability, customer satisfaction.
Yeah, they seem to be taking the right steps to address the potential challenges and risks that they might face along the way. They're being proactive and strategic.
Now, I'd love to hear a bit more about their specific plans for international expansion.
Mm.
They've already launched some products targeted at international markets,
Yeah.
but, which regions are they prioritizing?
Well, they're focusing on regions that are spending heavily on infrastructure and where demand for construction and agricultural equipment is high.
So are they looking at places like Southeast Asia, Africa, the Middle East?
Those are definitely on their list. They've also highlighted their compliance with CEV5 emission norms, which meet European standards, and that gives them a real advantage in those regions.
Yeah, that makes a lot of sense. I mean, meeting international standards is essential for breaking into new markets. It shows they're serious about competing globally.
Right. They're also using their experience exporting to over 37 countries to refine their international expansion strategy. They're learning as they go, which is always a smart move.
So it sounds like they're being, strategic and measured in their approach to international expansion. They're targeting those high-growth regions and using their existing expertise and product capabilities to their advantage.
Exactly. Now, let's circle back to that lingering question about their agricultural equipment sales for a minute. We've talked about the potential factors behind that slowdown, but what is ACE actually doing to tackle this challenge head on?
Well, they're definitely aware of the situation. And they're not just, sitting back and waiting for things to change. They're actively adapting to the shifting dynamics of the market.
Right. One of their key strategies is to diversify their product offerings within the agricultural equipment segment. They're expanding their product portfolio to cater to a wider range of farming needs and crop types. It's like they're casting a wider net to attract more customers.
Yeah, offering a more diverse product range makes a lot of sense. It allows them to tap into new market segments, and it reduces their reliance on any single product category. It's a good way to spread the risk.
Absolutely. They're also putting more effort into strengthening their distribution and service network in rural areas. They want to reach a wider customer base and provide better after-sales support, which is so crucial in the agricultural market.
Yeah, building trust with those rural customers is key in the agricultural equipment market. Farmers want to know that they can rely on the company they're buying from.
Right. They're also actively engaging with farmers directly to understand their evolving needs and tailor their products and services accordingly. It's all about building relationships and showing that they're listening to their customers.
It sounds like ACE is responding to the challenges in the agricultural equipment market with a really proactive and customer-centric approach. They're not just throwing their hands up in the air, they're rolling up their sleeves and getting to work.
Hmm. Yeah, they're adapting their product portfolio, strengthening their distribution and service network, and engaging directly with farmers to understand their needs. They're taking a multifaceted approach to tackling this challenge.
It's encouraging to see them taking these steps to, try to mitigate those risks and seize the long-term growth potential of the agricultural sector in India. They're clearly in it for the long haul.
Absolutely. Now, before we wrap up this part of our deep dive, I think we should briefly touch on ACE's management team and their corporate governance practices. These are always important factors to consider when you're assessing any company.
That's a great point, because a company's leadership and governance play a critical role in their long-term success. So what can you tell us about the folks at the helm of ACE?
Well, ACE is led by a really seasoned team of professionals with a deep understanding of both the construction and agricultural equipment industries. They've got the experience and the knowledge to navigate the complexities of these markets.
And their chairman and managing director, Vijay Agarwal, has over 50 years of experience in the industry. I mean, he's been around the block a few times.
That's right. He's well respected for his visionary leadership and his commitment to innovation and customer satisfaction. He's got a clear vision for the company, and he's passionate about meeting the needs of their customers.
It's also worth noting, I think, that ACE has a diverse board of directors with expertise in various fields, including finance, operations, and technology. They're not all from the same background, which is a good thing.
Oh, absolutely. Diversity on the board brings a range of perspectives to the decision-making process, which is essential for strong corporate governance. It ensures that they're considering all angles and making well-informed decisions.
And how about their corporate governance practices? Do they uphold high standards of transparency and accountability? Because investors are always looking for companies that are well-run and ethical.
Well, based on the information we have, ACE seems committed to maintaining high standards of corporate governance. They have a well-defined corporate governance framework in place, and they regularly communicate their governance practices to their stakeholders. They're not trying to hide anything, they're being open and transparent.
That's reassuring to see. Transparency and accountability are such key factors in building investor confidence and ensuring long-term sustainability. Investors want to know that their money is being managed responsibly and ethically.
Exactly. Now get ready, because in the final part of our deep dive, we're going to pull everything together and provide our overall assessment of ACE's investment potential, taking into account everything we've discussed, their financial performance, growth prospects, risks, and management quality.
Okay, and we'll also highlight some key questions that investors should consider before making any decisions. Stay tuned for the grand finale. Okay, so welcome back to the final part of our deep dive into ACE. We've explored their financials, their growth strategy, the potential risks they face, even taken a pretty deep dive into the economic landscape of India.
And now I think it's time to put all those pieces together and really answer the big question that's probably on everyone's mind. What's ACE's investment potential?
Yeah, before we jump to any conclusions, let's just quickly recap what we've learned so far. I mean, ACE is clearly a dominant player in both the construction and agricultural equipment markets in India. And they've got this really solid history of profitability and growth.
Right. They're riding the wave of some really favorable economic trends in India, like those massive government investments in infrastructure and all those initiatives to boost domestic manufacturing.
Right, and we've seen that they've built this really diverse product portfolio. They've got a strong sales and service network, and they're led by this really experienced management team that seems to have a clear long-term vision.
Exactly. And they're making some really strategic moves to expand their presence internationally, targeting those high growth markets with these really specialized products.
And they're clearly committed to innovation and sustainability, which are essential for any company that wants to thrive in the long run.
Oh, absolutely. But I think we also have to remember those potential challenges and risks they face too. Things like global economic headwinds, competition from those other players, and those unforeseen events that we talked about. Those could all impact their growth trajectory.
Yeah, and that slowdown in their agricultural equipment sales raises some valid concerns about the health of that particular market segment. So it's definitely something investors will want to keep an eye on.
For sure. But even with all that said, ACE seems to be pretty well equipped to navigate those, the ups and downs of the market and really capitalize on those growth opportunities that lie ahead.
So taking all of this into account, what's your overall assessment of their investment potential?
Well, from what we've seen, ACE appears to be a solid company with a strong foundation and a really bright future ahead.
Yeah, I mean, their financial performance is healthy, their growth strategy is well-defined, and their management team seems to have the experience and the capability to, steer them in the right direction.
Exactly. But I think it's really crucial to remember that past performance doesn't guarantee future results. Investing always involves some degree of risk, and there are just no guarantees in the market.
Right. Investors should always do their own research, carefully assess their risk tolerance, and just make sure that their investment decisions align with, their overall financial goals.
Couldn't agree more. And to help guide that decision-making process, I think there are a few key questions investors should consider when they're evaluating ACE's investment potential.
Okay, so what are some of those key questions?
Well, first, how will the global economic slowdown and all those geopolitical uncertainties affect ACE's international expansion plans? Those are factors that are largely outside of their control.
That's true. And also, can ACE effectively overcome those challenges in the Indian agricultural equipment market?
Yeah.
And regain its growth momentum in that segment? Because the agricultural sector can be particularly vulnerable to external factors.
Yeah, absolutely. Another question is, will ACE's new product launches, particularly the fully electric mobile crane, gain traction in the market, and make a significant contribution to their revenue growth. I mean, new product launches always carry an element of risk.
Right, and how well can ACE manage those rising input costs and maintain their profit margins in this, kind of volatile economic environment? I mean, controlling costs is critical for any business, but it can be especially challenging at uncertain times.
No doubt about it. And then finally, what is ACE's long-term vision for sustainability? And how will they balance their growth ambitions with their commitments to, environmentally responsible practices? Because more and more investors are prioritizing companies that align with their values, and sustainability is a big part of that.
Yeah, those are all really important questions for investors to consider as they, weigh the potential risks and rewards of investing in ACE. But remember, investing is a marathon, not a sprint. So stay informed, do your homework, and make decisions that align with your long-term investment strategy.
Well said, and we hope this deep dive into ACE has given you some valuable insights and, a better understanding of this really dynamic company.
Yeah, stay curious. Keep learning, and we'll see you on our next deep dive.